What are 5 stocks that I personally would want to buy in 2020? Well, stick around for this video because I'm going to disclose those 5 positions and I'm going to tell you exactly what valuation I would want to pick up these stocks at. So this video is actually inspired by financial education, and because I know that you guys absolutely love stock related videos, I thought I'd create my version of this on the channel here. Our like challenge for this video will be 500 likes, so guys, get liking, turn that gray button blue, and let's set some records here for likes on the channel. Also, I really want to hear from you guys. Let me know what 5 stocks you would pick for your personal portfolio in 2020 at the right valuation. So getting right into this, our first company is good old Home Depot, ticker symbol HD. So this is an incredible company, one of the largest companies in the world. And this is in a sector that I believe will pretty much never go out of style. Well, as long as humans continue to live in homes, that is. And what I love about Home Depot is that it is a company with massive free cash flow generation, a huge moat. It's the leader in this space, and it only really has one other competitor here. And the competition here comes from Lowe's, but if I had to pick one of these 2 companies for my private portfolio to build a massive position in, it would be Home Depot. Now, the reason I say Home Depot has a massive moat is because I believe that other online retailers like Amazon don't really have the infrastructure or the logistics to handle and kind of deliver products that Home Depot sells. And also, when people buy things like lumber, which is something Home Depot sells, they typically want to go pick it up in person. They want to be in the store. They want to talk to someone to figure out the sizing they need, the colors they need, the type of wood they need, all that kind of stuff. So in my opinion, I don't think this is really going to be a business that changes anytime soon. And I don't think the concern of having a pure online competitor here like Amazon is a big issue right now. Also, you got to remember that shipping costs for things like lumber are going to be extremely expensive because of the weight and the size. So it's not really practical for the average consumer to pay those high fees when they can just go drive in person and pick up that lumber themselves. So because of that, I don't really personally see Amazon being a true competitor here, but what I do see happening is Amazon partnering with one of these 2 companies in the future to really have some exposure to the space. But again, that's all speculation at this point. Now, I also mentioned that one of the reasons I like Home Depot is because of their high free cash flow generation. And if you're not familiar, free cash flow essentially just means the amount of cash the company has left over every quarter after all of their expenses are paid for. Now, in Home Depot's case in 2019, they generated over $10 billion in free cash flow. And that's $10 billion in cash they can use towards anything they want. This could be reinvesting in the business, maybe giving employees a bonus, or maybe paying out a nice dividend. And Home Depot is actually shaping up to be an excellent dividend growth company for the future. We have a current starting yield of 2.29%, which is reasonable, and a 5-year growth rate of 21%, which is incredibly high, especially when you couple this with 10 years of consecutive growth. Now, while the payout ratio is higher than I usually like to see under 50%, it's still sustainable for the foreseeable future. Now, the risk with Home Depot is during tougher economic times when the housing market struggles, this stock also struggles naturally. You can see here that after the last recession, they didn't have any dividend raises, but they instead kept the dividends flat. This is better than cutting the dividends in my opinion because it still helps investors bring in some of that dividend income, and many will choose to continue holding the stock instead of selling out and closing their position. Now, the last recession was specifically bad for housing, so perhaps in future recessions, Home Depot may continue growing their dividend, but most likely not at a 20% clip. We may see more modest 3 to 5% increases just to keep the dividend growth coming in. And because of that, I think Home Depot is actually going to be a very long-term dividend growth company. So what valuation really would I consider buying Home Depot at? Looking at their historical PE in the last 15 years, the current ratio of around 24 with a 4P of around 21.65 is reasonable, but it is a bit high. I would personally like to see this closer to a 4PE of around 18 or below, which is definitely possible, and we did see that briefly in late 2018. Unfortunately, though, I was not able to take advantage of this back then, so I am waiting here on the sidelines for this to come around once again. So because of these reasons, Home Depot is my first pick for 2020, and if we see these valuations again, I will more than likely have this stock added to my portfolio in a heartbeat. The second company that I will buy in 2020, if the valuation is right, is Visa, ticker symbol V. Visa has been a company that I've personally held in my portfolio in the past, and I've made good amounts of money on Visa. But at current prices, the valuation is just a bit too high for me. And although Visa is like a 99% guaranteed buy for me at the right valuation, that 1% still has me thinking once in a while if I really do want to own Visa stock. And this is because I think that in the future, in the next 5 years or so, we're going to see a lot of disruption in this space. Now, two main reasons I love Visa is because of their global exposure, and of course, because they are a free cash flow machine. And guys, most of the world currently is still using cash. Around 70-75% or so of the world is still using cash as of a study found in 2018. So there's still a lot of potential here for Visa to capture a lot of the global market. Visa really has an option in front of them to convert these countries to their platform to using credit cards and switch from a cash society to a cashless society. Now, the second thing I mentioned here was free cash flow. And like I said, Visa generates a lot of it. In 2019, they generated over $12 billion in free cash flow. And that's, again, $12 billion they can spend on anything they like. And similar to Home Depot, Visa also pays out a dividend. Now, if you pay close attention to these stocks I'm going to talk about today, there is a trend here with their amount of money that they generate and the dividends that they pay. Now, while the starting yield is underwhelming in Visa, what excites me here is the low payout ratio, the 20% growth rate, and 11 consecutive years of growth. So although we're getting less than a 1% starting yield, we have potential for things to grow very high in the coming years, especially with that $12 billion free cash flow generated annually. Now with Visa, it's not all sunshine and lollipops, and unfortunately, unlike Home Depot, competition here is actually pretty fierce. You have traditional competitors like MasterCard, American Express, and a couple other credit card companies out there, but then you also have newer players that are kind of cashless and app-based like Square or PayPal. And then of course you have the new upcoming cryptocurrency technology, and a lot of these companies like Facebook and other large companies building their own platform for that as well. So the future may be tougher than it looks right now, and I think that's going to be the case for any company in this sector. So that's why I'm a little concerned here at the valuations that Visa is at, and that's why I'm not buying it right now. But I'm hoping in 2020 we see some disruption, we see a correction in these stocks, we see Visa at a good valuation, and that's when I'll start buying this stock once again. So of course that begs the question, what valuation would I consider buying Visa at? Well, personally, I would like the stock at around a 20 PE. Currently we're at a PE of around 34, which is very high for a company like Visa, like I mentioned, and it has a 4 PE of around 25, which is again expensive in my opinion. So really at these prices, I'm just going to be a sidelines investor in Visa. I'm just watching the stock really. But if we do see that correction, it'll most likely be added to my portfolio in 2020. Stock number 3 is an absolute buy in 2020, and I may actually do that even sooner here in 2019. And this company is Johnson & Johnson, ticker symbol J&J. So out of all 5 companies we're going to talk about today, I believe Johnson & Johnson is actually at the best valuation today. The company has really been hit with so much bad news in the last few months, and as a result, the stock has pretty much been flat for the last few months. But it just goes to show you the amount of strength the company has, because it hasn't taken a massive, 30, 40, 50% hit. It's just down slightly from its all-time highs, and it hasn't made new all-time highs because of all this bad news. Now, the reason I haven't bought Johnson & Johnson recently was because if you follow the channel, I've been talking a lot about AbbVie, or at least I did a few months ago, when valuations were extremely attractive on this stock. So I did buy AbbVie pretty heavily in my portfolio, and I had a good amount of exposure to the healthcare space because of that. So as a result, I didn't want too much exposure in this space, and I haven't picked up Johnson & Johnson yet. That being said though, Johnson & Johnson is a world-class company, and there's a few reasons why I would love to own the stock in my portfolio. They're one of the largest companies in the world. They have global exposure. They are a dividend king, and they are a very profitable business. And just for reference, Johnson & Johnson sits at around a $350 billion market cap today. So this company is not one that you want to really compete with or mess with. It is the dominant player when it comes to pharmaceuticals. So Johnson & Johnson is a global company, like I mentioned, and this helps them generate over $18.5 billion a year in free cash flow, which is big money. And as a result, they have rewarded their shareholders with 57 consecutive years of raising that dividend, making the stock a dividend king. The starting yield is currently 2.82%, which is extremely fair, and the payout is only around a 43%, making this very sustainable. Johnson & Johnson is really one of these stocks you can just throw money at, and in 10 years, it'll have a high probability of being higher than it is today. And of course, while you're holding the stock, you're going to be collecting those growing dividends as well. So like I said, at these valuations, I think Johnson & Johnson is fair. It's a very, very attractive buy. And I may actually add this into my portfolio before the end of 2020. But between that time, if we see an even bigger correction in the stock, it's almost guaranteed this will be at the top of the list and most likely will be one of my first buys into my portfolio out of these 5 stocks. So moving on, number 4 is a stock and a company that I absolutely am a huge fan of, and I love their brand that they've created. And this is, of course, Nike, ticker symbol NKE. Now, Nike is a company that I've tracked for many years, and in 2017, I actually considered opening a position in this stock in the mid $50, but never ended up doing so. Had I did that, however, I would be up almost 70% in just 2 years, but of course, hindsight is 2020. And the reason that I love Nike is because it's a brand that's embedded in culture and it's embedded in sport all around the world. And as a result, they've built up such a loyal customer base that consumers will actually choose to go with Nike products as opposed to the competitors. Regardless of if they're more expensive or cheaper or lower quality, it doesn't really matter. Nike is the go-to brand for many people, especially athletes. And honestly, as someone who plays sports and enjoys playing sports, watching sports, all things to do with sports, I love Nike products, and it is actually my favorite brand by far when it comes to anything sports related. I love the quality, I love the fit, I just love Nike clothing. Now, although they may not be as much of a free cash flow generating machine as Home Depot, Visa, or Johnson & Johnson, they still have a good amount of money that they pull in every year. Here we can see that Nike actually pulls in around $5 billion annually, and as a result, you guessed it, they pay out a dividend as well, and they actually recently announced an 11% raise to that dividend just a few days ago. And with dividends, this company is setting itself up to be a long-term dividend growth company, and they have raised it consecutively so far for 17 years, on average growing it by 13.5% over the last 5 years. So the recent 11% increase is around this number as well. They do have a low payout ratio of around 33%, which is very attractive for any dividend investors, and the starting yield may not be that impressive today. However, this can be a very good source of passive income over the long term because of that low payout ratio and because of that dividend growth rate. So what valuation would I consider buying Nike at in 2020? Well, the current P of over 33 is too rich for me, with a 4P of over 27. But if we did see Nike come down to a PE of 20 or below, it would be a serious buy for me. And I think this is a company that has massive growth potential ahead of it. People are always going to be wanting to buy new clothing products. They're always wanting to upgrade their wardrobe. And in my opinion, there's always going to be demand for Nike products. And some of you may say, well, there's this whole minimalist movement which impacts Nike. Well, in my opinion, I don't think that these minimalists really are Nike's target audience. So in the long run, I don't really think that's going to be much of a concern. There's still going to be massive amounts of consumers that will pay a premium for Nike products. So I would personally love to own a piece of this company down the road, but as of right now, with these valuations, I'm sitting on the sidelines and I'm hoping we see some sort of sale here in Nike sometime in 2020. Now, our fifth and final stock is a company that is in an industry that I think will always exist as long as humans continue producing waste. And the company is appropriately named Waste Management, ticker symbol WM. Now, Waste Management is a very strong financial company. They have a good moat, they have a good amount of the market here in North America, and they make a product that we need whether we realize it or not. And really, this company has the waste business figured out to a science. They are efficient at picking up waste, they're efficient at recycling it, they're efficient at landfill, they're efficient at any and everything to do with waste, really. And as humans, as our population increases, as we consume more product, we're gonna naturally have a lot more waste in the future, and companies like Waste Management will benefit from that greatly. Now, this company is actually the smallest one on the list here with under a $50 billion market cap. So as a result, its free cash flow numbers and other metrics of the business are not as large as some of these other behemoths that we talked about today. That being said, though, they still generate a respectable $1 to $2 billion in free cash flow annually. And similar to Nike, this company is on track to becoming a good long-term dividend stock. So far, it has raised that dividend 16 years consecutively, but you can see the starting yield and the growth rate are pretty modest, but that is okay considering the stability of the company and the stock. Now that being said, Waste Management is trading at high valuations today, which is why I still don't have it in my portfolio. You can see that in late 2018, we saw a good sale on Waste Management, but I missed that opportunity personally, so I would be looking to get back into this company at a PE near or below 16. I don't think its current PE of around 28 with a forward PE of 24 is a good value for a stock in this industry. And in fact, I actually feel this company is overvalued at its current price. Nonetheless, I will definitely be a buyer of this stock in 2020 if we see prices come down. It's another company I think will give me good exposure to like the industrial sector. And because of that, I'd really love to have this as a strong piece of my portfolio. So that rounds up my top 5, but I'm really curious to hear what 5 stocks you would pick if you had to in 2020. Maybe we'll get that looming recession in 2020. Maybe we'll see some significant corrections in these stocks in 2020. But it doesn't really matter to me because I have cash sitting on the sidelines. I have cash ready to deploy into these 5 stocks when the opportunity presents itself, which will hopefully be sometime next year. Guys, thank you so much for watching. Don't forget to subscribe if you're brand new to the channel. And don't forget to drop that huge like down below to help get this video to 500 likes. Thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.